welcome everyone. We'll get started in just a moment. Just letting a couple people come in. Thanks so much for joining us today.
Adam, I'm glad they're still working on your building. I'm glad they're
Oh my God, can you hear it? And it was really great because all morning it was really quiet. Now it's
of course it was. I've been working for like 2 years, right? They're outside your window. No, you're good. It's not disruptively loud, but I just thought I'd acknowledge what the sound was.
It's not that loud. Okay, I'm going to get started. Welcome everyone. Thanks so much for being here. We're so excited that we're here for our annual general meeting and cooperative forum. I'm the Director of Member Relations at Shared Capital, and we'll get started in just a second. Just to tell you a little bit about what we're doing today, the business meeting will run from 12 to about 12:45 Central Time. It will be followed immediately by the cooperative forum, food security and sustainability through food cooperation, cooperative community market, community cooperative market in Tallahassee, Florida. We're really excited about that. I also just wanted to share a couple of quick reminders. Please introduce yourself in the chat. You can find that in the top bar, the menu bar. And if you have any questions, go to the Q&A icon and we'll get to those as soon as we can during the flow of the meeting. And we'll also have time for questions at the end. Please join us for the cooperative forum after the business meeting and then the breakout sessions after the forum, which will be more of a discussion. You can access all the meeting materials, the brief agenda, minutes from last year, and financial statements on our website, and I'll put that link right in the chat. And please note that this meeting is being recorded. But for now, again, thank you so much, and I want to pass it to our board chair, Terrence Courtney, to start the meeting. Terrence?
Right. Good afternoon, everyone, and thanks, Adam. Welcome to our 46th annual general membership meeting of Shared Capital Cooperative. I want to thank you all for being here today. I'm Terrence Courtney, as you heard, and I'm the president of the board of directors here at Shared Capital Cooperative. And my day job is the director of cooperative development and strategic initiatives with the Federation of Southern Cooperatives Land Assistance Fund. And by the way, my office is here in Atlanta, so hail from Georgia. So I'm now officially calling this meeting to order.
Thank you, Terrence, for calling the meeting to order. My name's Enrique Blanco. I serve as a vice president of the board of directors for Shared Capital. I'm a local Minneapolis, Minnesota resident, and I'm a member of Co+op. I served, and in the past I've held jobs in a CDFI, local CDFI serving Latinos. Thank you for attending the meeting. Today's agenda and meeting minutes are available on our website at sharedcapital.coop/annual meeting and through the link in the chat. If there are no objections, we will proceed with the agenda as presented. Okay, I think we can proceed.
Okay, thank you, Enrique. I had my mute button on. I got to remember to turn that off. So greetings again today. We're proud to have a dedicated board that brings experience, passion, and a deep commitment to our mission. I'd like to take a moment to introduce each of our current board members. Please give a wave or reaction as I call your name. So first, you've heard already Enrique Blanco, the vice president here at Shared Capital Cooperative out of Minnesota, Minneapolis, Minnesota. We also have Samantha Bailey from the Midwest Farmers of Color organization out of Minneapolis, Minnesota. Anna Boyer, she's our secretary here at Shared Capital, and she's representing the Tech Collective out of New Orleans, Louisiana. Christy Broughton, another board member here from the Mississippi Market in St. Paul, Minnesota. And you know me, of course, I'm the president, Terrence Courtney. We also have on the board Richard Dines, who's representing America's Credit Union out of Arlington, Virginia. Matthew Epperson, representing the Georgia Center for Employee Ownership out of Athens, Georgia. Georgia, big up. Anthony Goodwin. He's another board member here with Share Capital. He's representing the National Cooperative Grocers Development Cooperative out of Toledo, Ohio. And Cecily Mireles, representing Hasta Muerte Coffee out of Oakland, California. Charity Schmidt, who represents the Loan Committee. She's the chair of the Loan Committee, representing the Madison Cooperative Development Coalition out of Madison, Wisconsin. And Holly Jo Sparks, our treasurer, representing the Spartan Housing Cooperative out of East Lansing, Michigan. So big up to all my colleagues on the board. All right, great to see you all. So I'm now going to hand it back over to Enrique.
Thank you, Terrence. We are grateful to all of our members. As a cooperative, our members are the foundation of our organization and our work. We're also grateful to our annual member sponsors. Thank you to our lead sponsor, National Cooperative Bank, and to our generous sponsors, Capital Impact Partners, Dorsey and Whitney LLP, Survey and Ballot Systems, National Co-op Grocers, Neighboring Food Co-op Association, International Center for Cooperative Management, and Triangle Park Creative. We thank you all of our sponsors for their generous support. Your partnership helps make this event possible. In accordance with our bylaws, notice of this meeting was distributed to members in a timely manner. We confirm that proper notice has been given. Let me hand it over to Holly Jo Sparks for the board election results.
All right, thank you all for coming. I know this is what you've been waiting for. I'm Holly Jo. As mentioned, I'm the treasurer of Shared Capital Co-op. At Shared Capital, we have an 11-member board of directors. 10 of those seats are elected by member co-ops, and 1 seat is elected by individual members. Ooh, spoiler alerts on the screen. All of the candidates are nominated by our members. This year, only our co-op member seats were up for election. So we didn't have any individual member seats up for election this year. This year, the board election was conducted in compliance with our bylaws and our governance policies. And we did have a very strong slate of candidates. It was a competitive election ballot, and we really are grateful to all of those who stepped up and put their names forward this year. The results are in, and we're excited to announce that the following candidates were reelected to the board. Ta-da! Enrique Blanco, Anna Boyer, Cecily Morales, and Charity Schmidt. All were reelected incumbents. So grateful to continue serving with each of you, and also to the candidates who ran and were not elected this time. Thank you again. Over to you, Christina. And once you come off mute, we'll be excited to hear from you.
It's fighting me on it. Can you hear me now? Can you hear me now? I hope so. Okay.
Yes.
Terrific. Sorry, it was fighting me on the mute, but glad to be with you today. And thank you so much for joining our annual meeting. So I want to take a few minutes to look back at 2024 and share some highlights. we want to celebrate some of the accomplishments, but also we will share a more detailed financial report that will follow my comments. So, first of all, as a milestone, we were founded in 1978, and since that time, we have now made over 1,000 loans to cooperatives, and that totals over almost $80 million that we've put out into the cooperative economy. So we're really excited to celebrate that with you. Let's see if my slideshow will catch up. So 80 million in financing since our start. Last year we had effectively doubled the size of our fund since 2019, reaching 26.6 million in total assets. I'm going to throw several numbers at you but we actually approved over 28 loans last year, totaling 7.5 million, and closed 19 loans for 2.2 million. There are a variety of reasons why projects either don't move forward to closing, or they may take longer and have closed this year. So 19 of those 28 loans that were approved did close in the year. And then we were able to disperse 27 loans totaling almost $4 million. So those are dollars, both new loans that were closed in 2024 and also loans that may have closed the prior year but were waiting for funds to go out because of the timing of their projects. We were really pleased that we continued our commitment to racial equity and justice, making sure that we were focusing on reaching co-ops that may not have historically had access to capital. Last year, 37% of our co-ops that we financed, 30% of our financing dollars, actually, this is in dollars, went to Black, Latina, and majority people of color owned co-ops. And a full 83% of our dollars went to co-ops that were either majority owned by people of color, majority owned by low-income communities, by women, or by LGBTQ communities. So really proud that we continue to reach folks who often don't have access to capital. So a few other highlights that I'd love to share. I mean, 2024, we saw really, really strong demand for financing for both new co-ops, for converting co-ops that were transitioning to cooperative ownership, and also to expansion, to co-ops that were expanding last year. The demand was more than double what we had available in funds, and our capital raise fell short of our projections. We raised quite a lot of capital, but we had ambitious plans to really more completely meet the demand that we were seeing and the external environment, and our capital tools did not prove adequate to meet that full demand. So we were turning co-ops away. We did make a lot of operational improvements throughout the year with IT system updates and new systems, refining our underwriting, continuing to work on how to really support our commitment to racial, economic, and social justice through our underwriting, and improving our internal data tracking and compliance. One major highlight for last year was that we were able to actually repay one of our Class A preferred stock holders for the first time. We launched our Class A preferred shares in 2009, and since that time, we've had a lot of very committed investors who were willing to stick with us until we were able to begin to allow investors to exit over time. So, as you may all know, our preferred shares are a patient long-term investment, and so we expect investors to stay for 7 to 10 years, ideally. This investor, the Northwest Area Foundation, had actually had funds with us since 2003, so for more than 21 years, and it had been invested in preferred shares since they converted their program-related investment to preferred shares in 2012. So we were grateful and thrilled to be able to return their $500,000 and still raise lots of new money to keep moving forward. So we really appreciate their support and patience and trust. We completed our 3-year national direct public offering. That was 2021 through November of 2024. And with a limit of 3 years, we had to wrap it up at the end of 2024. But we're very pleased with the success of raising over $7.5 million through that 3-year DPO. We had planned to immediately launch a new direct public offering. Unfortunately, our submission to the Securities and Exchange Commission met more intense scrutiny than on our prior round when we got it approved in 2 weeks. This time, we were met by quite a lot of questions and follow-up that seemed to be grounded in the reviewers' interests on whose desk it landed. So all valid questions about our work that we thought we were fully answering in the offering and are providing additional clarity to. However, as a result of all of that scrutiny, we paused our offering submission and until our audited financials would be ready, as we felt they would provide additional clarity. And so with our audit now in hand, as of last week, we are moving forward with that Securities and Exchange Commission qualification and hope to have that in place within 60 days, assuming that we have heard about other groups also encountering some challenges. So hopefully we will move that forward effectively. That will be for another 3 years. In the meantime, we did go ahead and open up an offering that is exclusively for accredited investors, and that offering is open now. So investors who meet the accredited investor qualifications can still make investments while we wait for the SEC's qualification of our new DPO. So we'll be back to folks with more once that DPO opens. So those are my comments, and I'd love to then invite Enrique Blanco to join me in talking about one of our big projects last year, which was that the board and staff engaged in strategic planning. It had been a number of years, I think since 2019, since we had engaged in a strategic planning process, and it seemed like a great time to look ahead and evaluate how we can be most effective at meeting our mission. We were really fortunate to work with the very skilled consulting group for the culture, and they provided us guidance throughout the process. So one of the things that we did during our strategic planning engagement was to develop a new vision statement. So Shared Capital has never had a vision statement, and the board and staff built the following vision statement, that we envision vibrant communities shaped by the transformative power of cooperatives. Cooperatives stand as revolutionary forces for racial and economic justice, driving an economy that prioritizes people, community, and the planet. Wealth and power are equitably distributed, fostering self-determined growth and a flourishing, just economy. And we're excited to stand behind that vision for a future world to be built. And let me turn it to you, Enrique.
Through this process, we reaffirmed our existing mission, which is to build a just, equitable, and democratic economy by investing in cooperative enterprise. Together, we develop a set of 5 organizational values that ground our work. They are racial and economic social justice, cooperation, accountability, accessibility, and sustainability.
Great, thanks. And as part of our 3-year strategic plan, we are continuing to build out a number of areas for the implementation of that plan, but identified 5 priority areas of work. 1, strategic growth and sustainability of the organization. 2, racial, economic, and social equity and justice. 3, organizational culture, capacity, and efficiency. 4, cooperative governance and member engagement. And 5, technical assistance, training, and networks to support the success of cooperatives. And I'll hand it now to Holly Jo.
Great. Let's get into it. You've heard some of this from Christina's report already. 2024 was a strong financial year for Shared Capital. Our growth slowed compared to the prior 2 years, but the financial performance remained very strong. In 2024, 2 significant transactions impacted our financial performance. First, we received 2 distributions totaling $365,000 from Radiance Structured Finance, a solar financing company, whose principals came out of cooperative financing work and who in 2019 entered into an agreement to support Shared Capital's work. Secondly, we received forgiveness of $1.5 million in debt from New World Foundation through its Quality Jobs program for our Accelerate Employee Ownership program, which is a collaboration with Project Equity. The forgiveness is granted based on meeting certain requirements under the 2019 funding agreement. The foundation forgave $1.5 million in 2023, and this is the second tranche of forgiveness. Now, $1 million of the original $4 million of debt remains, and we are hoping to achieve forgiveness of that balance by 2026. A portion of these funds were passed through to a program partner under our agreement. As Christina mentioned earlier, we're thrilled to announce that the Board of Directors met in April 2025, and the board approved a 5% dividend on Class A preferred stock. The $215,000 in dividends is allocated. This says $165,000, but I think it's $215,000 for 2025. Is allocated proportional to the 2024 holdings and was issued in additional shares. It will be applied to all accounts in 2025. Our goal is to pay a 5% dividend annually to the holders of preferred stock, and Andy will clear that up when we get to our financial statement.
And Holly Jo, I apologize that you're correct. It is a total of 215,000. So that's an error on the slide.
Very good. But our financial statements, as you will soon hear, are correct. We are also very happy to announce that the Board of Directors approved a patronage dividend. As a co-op, Shared Capital is able to return a portion of its net profits to its member borrowers as a rebate on the interest they paid on loans that they take from the cooperative. So the 2025 patronage dividend is the largest we've had in our history. We're returning $117,000 to our members, which represents a return of almost 10% on the interest that was paid by our member borrowers in 2025. That's right. Let's see the reacts and emoji responses. This is the first time that Shared Capital has issued a qualified patronage dividend, which means we'll be distributing 20% of that dividend in cash and allocating the rest to member equity accounts. A qualified patronage dividend is tax deductible to the co-op. And so it's a strategic move that's going to help us reduce a significant tax liability. Members will receive or have already received a formal written notice of that dividend. We're really proud to be a co-op and thank our members for doing business with the co-op, and so that we are able to issue a patronage dividend. So we're glad to share that with the members. As I mentioned, our 2024 independent audit, it was performed by Wegner CPAs, in Madison, Wisconsin-based firm with substantial experience in both co-ops and in CDFIs. I think most of the people here are probably familiar with Wegner, and I am pleased to report once again that we had a clean audit in 2024 with an unqualified opinion. And with that, I will hand it back over to Andy Shively, Shared Capital's controller. Andy is the founder and the director of operations for Key Figures, a worker-owned co-op that provides accounting, bookkeeping, and tax services. And she is based out of Austin, Texas. So Andy will provide the 2024 financial report and correct anything I got wrong in the slides. Over to you, Andy.
Thank you so much, Holly Jo. And thank you also to everyone in attendance today. I'm really excited to be here again to share information with you about Shared Capital's financial performance in 24. I do want to note that the slides I'll be sharing are very condensed versions of the full financial report, just to make them digestible on your screens. However, as Adam previously mentioned, the full versions are included as part of the meeting packet, which is online at sharedcapital.coop/annual meeting. And additionally, the full audit report will also be available on Shared Capital's website. I do want to start with the balance sheet, if we can move back one slide. Or maybe, yeah, there we go. Okay, starting with the balance sheet. We continued to see asset growth in 2024, ending the year at $26.6 million in total assets. That's a 4.4% increase over the prior year. Now, while our overall assets increased, our loan portfolio, otherwise known as like the amounts of loans that are outstanding to our members, the loans receivable line on the report, that did contract slightly by 2%, closing the year just under $23 million. While we saw record lending in the prior year with more than $10.3 million in new loans dispersed in 23, new lending really did slow significantly in 24 with less than $4 million going out the door. Having dispersed having dispersed our excess capital in 2023 to new borrowers, we ended that year with about $3 million cash on hand, which is half what we started with in 23. So coming into 24, we really knew that our ability to continue lending at that pace was dependent on new capital raise. Now, while we did ultimately recover, as you'll see as we move down the balance sheet, our efforts to raise new capital were initially depressed by very high interest rate environment, significantly increasing competition for investment dollars. So after tapping the brakes on new lending toward the beginning of 2024 in order to manage liquidity, we haven't quite built back up to the same speed with which we were moving in 22 and 23. The three-year trend, however, does remain one of very strong growth, with total assets increasing 27.3% and our loan portfolio specifically growing nearly $9.8 million, which is an increase of 74% since 2021. Moving on to our liabilities. In 2024, we saw a net increase of $1.3 million, or 8.6%, in the debt held by investors in shared cooperative. That's that notes payable line. And this is after a $1.5 million reduction in our notes payable following the debt forgiveness from the New World Foundation that Holly Jo mentioned previously. Overall, our liabilities held steady, ending the year at $20.6 million, which is a less than $200,000 change from the prior year. Looking at our equity, our preferred shares offering performed well in 2024, and we closed the year with investors holding $5.16 million in preferred shares, a $1.3 million or 27.9% increase net of the redemption that Christina mentioned earlier. We also saw an unusual increase of $131,000 in our common stock holdings. This 5.6% increase is substantial, as we normally see about 1% growth or less in a common stock year over year. This leap in common stock is the result of the large patronage declaration made for 2024 that Holly Jo just mentioned, and the addition to the member capital accounts of the portion of that patronage rebate that will be retained in the co-op. Looking at our collective capital or retained earnings, though we closed yet another profitable year, our retained earnings did decrease by $53,000. This is due to the allocations of net income to our preferred shareholders and to the patronage allocation to our members. So while we are working toward improving our retained earnings, these allocations are really critical to continuing to raise new investment capital, to fund our lending, and to manage our increasing exposure to tax liabilities. Overall, equity in the cooperative increased by 28%, pushing our equity to asset ratio, which is a key metric for cooperative development financial institutions like Shared Capital. We pushed that metric to 30%, well over our internal target. Moving on to the income statement, thank you. Our overall income was up by 17.3% over the prior year. However, we did see a slight drop in our revenues related specifically to lending. That's the interest and fee income, which were down 2.1%. Ultimately, though, as is true of the overall portfolio, while lending revenues basically held steady in 2024 compared to 2023, when we zoom out to look at the three-year trend, our annual earnings on lending activity have more than doubled, up 55% from the $990,000 we earned in 2021. We did see a big jump in other earned revenues in 24, closing the year at nearly $424,000, thanks in large part to the disbursements received from our partnership with Radiant Structured Finance, which Holly Jo mentioned previously. While we did recognize nearly $2.6 million in contributed revenues in 24, these were largely passed through grants to partners and are offset by the contributions expense, as was the case in the prior year. Looking at our expenses, our interest expense, that's how we pay, that's the interest that we pay on the debt that is used to fund our lending to cooperatives. Our interest expense increased by 10% compared to the prior year, which is largely a reflection of the increase in the debt held by investors in the cooperative. Personnel expenses held steady, less than a 1% change, but we did see a somewhat significant increase in our other operating expenses. Those were up 19% over the prior year. This was due in large part to the one-time investments made in the strategic planning process and doesn't really represent new levels of operating expenditures carrying into the future. Provision for loan losses, which is a non-cash expense that's tied to both the risk rating and the overall size of the portfolio, that increased 13% despite the lack of growth in the loan portfolio. So while the overall risk rating of the portfolio did tick up just slightly, this increase in our provision expense is largely driven by a couple of write-offs that we did have to make in 2024. Though we did end the year with a net income before taxes of more than $376,000, you can see that a large chunk of that, more than $148,000, will be lost to income taxes. While our tax liability has been really manageable in prior years, thanks to some net loss carry forwards from losses taken many years back, we've really largely exhausted those tax benefits after so many recent years generating a net profit. Overall, the cooperative remains on a solid financial footing, continues to make progress toward our fiscal goals. While we've seen substantial growth over the last several years, the pace of that growth did slow significantly in 2024. And the key now is to continue to drive new investments in shared capital and to effectively pace new lending accordingly. And with that, I'll hand it back to Holly Jo.
Thank you, Andy. And truly, thank you both to key figures and also to you, Mark Downey, who is our Director of Finance and Operations, for another delightful and well-managed, financially successful year. We appreciate you. Christina?
If I can get the unmute to work, I will be back with you. Okay, so just want to take a couple of minutes to look at 2025. I mean, I'm sure we don't need to say to folks who are joining us today that this has been a really concerning start to 2025. Really enormous amount of social, economic, and political uncertainty that we're all facing. I will say that for shared capital, from a budget standpoint, we're not being directly affected by the federal funding cuts, which is a tremendous relief. We actually have been able to add staff during this period when many of our partners are facing staffing cuts. That said, while we don't rely on federal dollars, our partners do, many of our members do, and much of the cooperative sector does. That means that the capital pipelines, technical assistance networks, and borrower readiness might be significantly impacted by recent and upcoming changes. We're also extremely concerned about the regressive and repressive climate that our members and communities are facing. We are also recognize that there'll be a likely impact based on the economic outlook as folks begin to predict a potential recession. So we are working with our members, we're working with our partners to make sure that we're tracking upcoming developments, but also there in support. Shared capital is in a strong position because we aren't dependent on federal money to stand with our members and the cooperative communities. We'll be working with our members, partners, and others to make sure that our voices are all heard during this time. And we recognize that we really need a cooperative economy more than ever right now. And we're going to stand with our partners to make sure that we can continue to move that work forward. Right now, we are internally really focused on internal capacity and building our capital base to meet the needs of our members. So we've been making improvements in technology, systems, and staffing that are continuing into 2025. We're excited that we've added actually 4 new staff, as I mentioned, 4 new staff just since January for outstanding folks who are helping bring additional capacity to our team that has been overextended for a long time. So at this point, we have 5 loan officers on our team. One of our prior loan officers is transitioning into a new important role around programming and technical assistance, and that will leave us with 5 loan officers. That's our largest and most diverse lending team in our history. While we don't expect the same level of fund growth overall that we saw in the last 3 years, we are committed to continuing to work to raise the dollars that are needed to meet the pipeline of demand. Our loan pipeline is about 3 times the size of our available capital at this time. And we're thrilled to have our new Director of Capital Strategies and Impact Investing, Michael Schultz, joining us. Today is his first day, and we're thrilled to have him on. He will be working with us together with me and Adam, our Director of Member Relations, to really build additional capital, expand the base that we have. We will also be working throughout 2025 to finalize our strategic plan, building out the more detailed goals and outcomes that we expect to see over the next 3 years, including really building accountability structures to be able to keep our members and the community up to date on what we've accomplished and what we haven't, and also building out work plans and timelines for transparent reporting. We've reaffirmed, our board and staff as a whole have reaffirmed our commitment to racial, economic, and social equity and justice. And we want to stand firmly in that position as many of our partners are encountering challenges with being able to stand up and make those statements. So this is really important. We are not changing our website. We're not changing our language. We are continuing to move forward. And then I just want to call our members and our partners to action. I think at this time, as we all need to move forward together to really make sure that all of our members and partners are protected and our communities are safe, to let us know how we can support, we'll be engaging with you to see how we can stand by your side and step forward to provide direct support and assistance. We also are looking for new capital, as we've mentioned throughout this presentation. So looking to members, looking to the communities, looking to investors to help bring those dollars to the cooperative sector, because right now, more than ever, is a time for us to build that cooperative economy that really has the resilience and solidarity that we need. And I'll end with just saying that we really do believe that vision statement that we've come up with together reflects where we want to see our work help lead with the rest of you. And so making sure that we can build a cooperative future that is centered in racial, economic, and social equity and justice. And we look forward to working with you in that. And I'll hand it to Terrence.
Thank you, Christina, and thank you for the comments. I think, as you say, we're moving into a time period where now more than ever, I think cooperative economics are not just desired, but required. So thanks again. I want to switch gears now and just kind of take some questions from some of the people present here. Adam, do we have any questions in the chat, for board members or Andy or Holly Jo, whoever?
Thanks, Terrence. I don't have any questions in the chat or the Q&A. So everyone, you have a moment to enter questions now. Also, keep in mind that we will have 3 breakouts that are much more discussion based, and you can ask questions then too. But nothing for now.
Okay. Well, maybe something will take place in the next few minutes, but in the meantime, I'll pass it on to Holly Jo to, lead us in some thank yous and introduce the staff.
Yeah, absolutely. As the curtain is starting to close on our 46th annual general membership meeting business portion, I'm going to call all of our dedicated staff to the stage and ask you to join me in thanking each of them for their deep commitment to supporting our members and advancing this organization's mission, especially in light of the year that we've had and continue to have. So in alphabetical order, please raise your hands for Mark Downey, Director of Finance and Operations, Cliston Eccles, Loan Officer, Mark Fick, Senior Loan Officer, Christina Jennings, Executive Director, Ashley Anderson, Loan and Investment Associate, Roderick McCulloch, Loan Officer, Daniela Preisler, Loan Officer, Michael Sines, Loan Officer, welcome. Michael Schultz, Director of Capital Strategies, welcome. Andy Shively, our Contract Controller, and my partner in financial activities. Mike Sayo, Portfolio Manager. Adam Trott, Director of Member Relations. Rhonda Weidling, Operations Manager, and finally, Esther West, our Loan Officer. So let's give it up to all of our staff. Thank you so much for the work you do and for putting up with my cheese. And I think we have some more sponsors that we'd like to appreciate. Check.
Yes, you're right, Holly. Thank you. So let's take another moment to kind of give thanks and acknowledge our sponsor. I want to start with our lead sponsor, National Cooperative Bank. Thank them for their generous support. We also want to thank our other sponsors who are as important in many respects: Capital Impact Partners, Dorsey and Whitney LLP, Survey and Ballot Systems, National Co-op Grocers, the Neighboring Food Co-op Association, the International Center for Cooperative Management, and Triangle Park Creative. Thank you all for your generous support and sponsorship. So it seems that I don't know if we have any questions yet. Adam, anything in the pot yet?
We did just get a question, Terrence. This might be something to have for the financial deep dive, but the question is, can anyone restate the amount of co-op loans desired from the community versus capital available and raised in 2024? And then part two, how short was the capital raise versus expectations?
Yeah, I don't have our 2024 goal in front of me. If anyone else does, we can comment. But I think we were, we'll see what we could pull with that. But I think we had about 15. We approved about $7.5 million in loans, and we had about $15 million worth of loans in the pipeline. So we hit about half in approvals, and then only a portion of those were actually closed, not because of lack of capital, but because of timing of projects. So I say we were meeting about half of our goal last year, and this year the pipeline has been between 20 and 25 million in new potential loans, and we're only projecting being able to finance about 5 million of those, maybe 7.5 if we can hit our capital goals squarely. So that leaves another 2/3 or more that is not being able to be funded. And I think I will hand it back to you, Terrence, if there are no more questions, Adam.
No more questions.
Okay. Well, it seems at this time we have no unfinished business. So unless there's any new business, we will move to adjourn. Okay. Pause. No new business. Well, in that case, this concludes our business meeting. I want to thank everybody here present for being here and for being part of this cooperative movement. I need to ask you to stay put, and we're going to move right into the cooperative forum next. And we need your participation for that as well. The title of this cooperative forum is "A Community Builds Food Security and Sustainability Through Cooperation." And that's going to be with the community co-op market of Tallahassee, Florida. So please stay put, stick around, and we'll move into the next section. Can I get a motion by one of the members to adjourn the 2025 annual general member meeting?
Before I make a motion, I just want to acknowledge that there were some questions in the Q&A, and Adam caught those, and hopefully we'll be able to follow up with those individuals directly.
Yeah, thank you. I'm going to directly respond, and then we'll have some discussion as part of the breakout sessions. So we'll have some response there.
Given that, I'll move to adjourn.
Can I get a second?
Second.
Right. All those in favor, say aye or raise your hand or use your computer thingy. All right. Opposed? Any abstentions? Okay, motion carries. Thank you, everybody. We'll see you in the next segment. Meeting is adjourned.
Great. We are going to let folks, so folks can take breaks as they need to, but we're going to move straight into the cooperative forum. We're right on time to kick that off, but want to make sure we have as much time as possible. So again, I'm Christina Jennings, the Executive Director of Shared Capital Cooperative, and I'm really thrilled to have several people join us today. As was mentioned, we're going to be speaking about how a community can build food security and sustainability through cooperation. And with us, we have Anthony Goodwin, who is a Shared Capital board member and also the CEO of the National Cooperative Grocers Development Cooperative. And we have Edea. If I can find my notes here appropriately, we have Edea.
Edea Bailey.
Bailey, thank you very
Bailey,
much.
the chair of the board of Community Co-op Market.
Thank you. Edea Bailey, if I go to the next slide, I have her name. Edea Bailey, who's the board chair with Community Co-op Market. So thanks, Edea, for being here. Sorry for that. And also we will have Roderick McCulloch, who is our loan officer, who works on particularly on food co-ops, join us for this discussion as well. So let me just take a few minutes to frame the conversation, and then I'm going to call on Anthony and Edea to share, and Roderick to share some comments. So first of all, we know that that grocery is an incredibly challenging business. We have worked with cooperative grocery stores for decades, and over the last 10 to 15 years, the business has gotten even more challenging. Margins are thin, there's intense competition, and there's not always as much data as is needed. High inflation has made things even tougher for many over the last few years, and yet the National Co-op Grocers NCG Development Cooperative and Shared Capital have worked closely with together and also with food co-ops to make sure that we're able to support our members to develop plans and get the financing into the hands of the cooperatives that are starting and expanding. Roderick is a member of the board of the National Co-op Grocers Development Cooperative, and he gets to see from that angle as well as a loan officer seeing projects that are coming forward. So I want to start by asking Anthony if you could share a little bit of the plan about sort of how Community Cooperative Market, if you could tell us a little bit more about that project and how you all came to get engaged with it.
Yeah, sure. Thanks, Christina. Good to see everybody. So as Christina mentioned, the project is under the National Co-op Grocers Development Cooperative, or DC. The DC was incorporated back in 2008 as a subsidiary of NCG, and so it's a cooperative with NCG being the sole member. And from about 2008 to 2020, the DC housed our store development services. And so for those of you in the food co-op community, if you ever worked with Dave Blackburn or our store development team on building a new store or doing any kind of feasibility, the DC provided that service for about 12 years. And in 2019, 2020, the decision was made to move those services into NCG and for the DC to shift gears a little bit and to become kind of the R&D arm or function of NCG and to really focus on innovation within the cooperative sector. And so one of its first projects was in 2020 was the establishment of Community Co-op Market, or CCM, in Tallahassee, Florida. And so CCM was previously New Leaf Co-op, and so it was a 50-year-old kind of historic traditional natural foods co-op that was a member of NCG that had been struggling over the years and made NCG aware that they planned to close the doors. And at this time, we were kind of thinking about innovation and new strategies. And so the idea was to acquire and convert CCM or New Leaf to CCM and to provide kind of a new strategy in that direction. And so CCM is a hybrid co-op. It is 2/3 consumer member and 1/3 investor class. And so the DC holds a 1/3 ownership and 3 of the board seats, and then 6 board seats are the consumer kind of customer members. And so there was really 2 visions or goals around the development of CCM. One was to accelerate co-op development. As many of you probably know, it takes 8, 10, 12 years to develop a co-op. And so the vision was to create a vehicle that could get fast and kind of shorten that development process. And so with the first one being CCM in Tallahassee, but to be able to do that on a large scale and to create kind of a multi-state, multi-store cooperative. And so we would target additional cooperatives that maybe were struggling and looking for new investment, or also targeting independent grocers, maybe aging independents that were looking for an exit, that CCM could get kind of really good at identifying those opportunities, going in, acquiring the business, and converting them to co-ops. That still remains to be, the vision for that. But I mentioned this happened in 2020, so pandemic, and it's really taken a lot more to get CCM, the Tallahassee store, stable as kind of the pilot before we would expand. But the long-term vision remains to be able to go out and acquire again and convert stores to co-ops. And so that was one of the vision. The other component was really to be able to put a model together to serve for co-ops to serve low-income, low-access communities where CCM sits. It kind of sits on the edge of town with, to its north is the more affluent customer base, which it appealed to for those 50, 60 years that it was New Leaf Market as a natural food store. And kind of to the south of the store is the less affluent neighborhood. And so part of the reason that New Leaf struggled was, new competition came in. There started to be more and more natural grocers, there's Whole Foods, Trader Joe's, and New Leaf really wasn't able to adapt to the competitive marketplace. But they also really didn't do a good job of serving the entire community and being reflective of the community's needs. And so that was the other component of this investment was, could we better serve the community and kind of test new ways around pricing and product selection, community engagement, to create a model that as we went out and duplicated and replicated across the country would create a viable model and learn some things on how to better support co-ops in low income, low access communities compared to kind of the traditional, natural, affluent food co-op that many people think of. And so that was the vision. I don't want to spoil too much. Roderick and Edea are going to add more about kind of what's happening today. But the vision again was around creating this vehicle for fast acceleration and development, and then also R&D around serving co-ops in LILA communities. So I will pause there.
Great, thanks, Anthony. That's real great context for the conversation. Thank you so much. And I know that Shared Capital started working with NCG-DC in providing some financing to community co-op market back a number of years ago, really to support that vision of creating that sort of original vision of creating a more accelerated model for co-op development. And I wanted to invite Roderick to talk about the sort of the nature of the loan that's being discussed now and kind of what that if he wants to share that context.
Yeah, absolutely. Thanks, everybody. My name is Roderick McCulloch. I'm a loan officer with Shared Capital. And primarily, I focus on anything food co-op or food adjacent, though, we wear multiple hats here at Shared Capital. I spent about a decade working at Seward Community Co-op in Minneapolis before joining the Shared Capital team, and currently serve on my neighborhood food co-op, which is Mississippi Market here in St. Paul, as well as on the NCG DC board. It's really exciting to be a part of that group and get to support the work that Anthony's doing to find innovative ways to get co-ops open faster, and specifically how to meet the needs of LILA communities. Food co-ops have been trying to meet the needs of their communities for many, many, many years, going back to the Rochdale pioneers in England and the Industrial Revolution, trying to increase product standards and transparency, to a bunch of food co-ops in the US in the 60s and 70s that recognized desire for more organic food products. To now, we've got food co-ops like community co-op market across the country that are trying to respond to the needs of their community today. And one of the, so Shared Capital gave a loan to Community Co-op Market back in 2020 for the amount of $600,000. And it was really primarily to sort of get the assets from New Leaf Market Co-op and get some new equipment, do some leasehold improvements to really improve the functionality and the appearance of their store in Tallahassee. I think it's a really interesting model with that investor component. And I'm really excited about the possibility of community co-op markets being able to replicate this process. I work most closely with Rainey Deschanais, who is the GM at Community Co-op Market. And what I love about working at Shared Capital is the personal relationship that I get to have with our borrowers. So when they were struggling, and they have had some struggles over the last few years, Rainey would reach out to me and see if there was anything that Shared Capital could do. So we did offer some interest-only periods during the slower months of the summer when a lot of the college population disappears. And he was telling me about the approaches that they started taking, I want to say a little over a year, maybe a year and a half ago, to try to increase the traction with a broader community in Tallahassee. They really wanted to focus on targeting their neighbors and marketing affordability. And so they've taken some really, innovative is the word to use, approaches to trying to increase affordability of a huge amount of their products. And so far, they've seen significant success. Sales are growing and membership is also growing. So I'm really excited to hear from Edea, who's, on the ground there, seeing this work happening. And yeah, I think that's all I have to share. Thank you.
Great, thanks, Roderick. That's terrific. So yeah, I want to bring Edea into the conversation. So Edea Bailey, who's the board chair with Community Co-op Market. Edea, wanted to hear from you a little bit about, so what was, you as board chair, you saw what's been going on for the co-op. What was the context before this new strategy, before the new plan? Can you share a little bit about background with us?
Absolutely. So I just want to make sure, can everybody hear me?
Yes.
Wonderful. So yes, the good news is, as a patron and then eventually joining the board, I think, the past few years have been a bit of a blur. I think I've been on the board for 2 years. So previous to this strategy, we were just trying to figure out how to make it work. And we knew that we had certain strictures, such as, we are where we are. Our lease is what our lease is. Trying to market with what we can. And, we were using Instagram, we've done mailers, we've done, what else we did? Using Facebook has been very useful. But I could say, as a patron, before I joined the board, there are things in the store that just did not make any sense to me. So it was really nice to, once we got into this new strategy, to actually try to get it out of the mud. And I know that it seems like there was a time where we were in a search for our CEO and other people had stepped up to fill that role. So there was this idea previously, like, once we get the new CEO, we'll figure it out and we'll go from there. And then the new CEO came and there was just still these issues in place. So that's to answer your question. To previous to the new plan, we were just trying to figure it out, more or less.
That's great. Well, share with us a little bit about the new, a little bit more about the new plan. Then I appreciate Anthony gave us some overarching context. And let me pass it back to you to share some, but that context of
absolutely.
Yeah, go ahead.
Because of course, with that context, you keep in mind, all of this trying to figure out is happening as the pandemic is coming into its fruition. So there was a lot of hurry up and wait, like, okay, well, like, we're going to figure this out. But then, of course, then we get the new CEO and then the world is closing down. And then, so it was just kind of like, we were hoping for the moment to where everything was the best possible circumstance and all of the outliers weren't happening, to where we could then start this project, which doesn't really help because after COVID, we're still dealing with the fallout of COVID. But all things considered, we had a CEO previous to Rennie, and Rennie was our CFO at the time, where the board had some concerns. and it wasn't with that previous CEO specifically, but it was just one of those conversations of we've been trying to wait for the good moment to figure out how to give the best assessment of the situation. And CE, who I believe works with the NGC, was on the board at the time. CE Puh, I believe that's how you say his last name, or Pugh. And there were concerns about how inventory was being done. There was issues about price, like concerns about pricing. And of course, you want to respect the structure of the store and the CEO making certain calls, but at the same time, the time was running out and we had to figure out, okay, is this something that is sustainable for us to continue to do? Or should we be talking about how to wrap this project up? And I don't know if it was between the chair at the time, who's Rosemary, or myself, but I said, well, how about we take on an approach to where between all of us sitting on the board, not myself, I'm a patron, there's a lot of experience in the sector, funding, and as well as just grocery, retail side of grocery. How about we essentially give this co-op a lifeline through expertise? And that's where the concept of us coming up with a business development officer came into play. And CE decided to step down from the board and take on this role. And of course, we did everything by the book. We created a contract and what the strictures of that would be. So the proposal was, we are going to come up with a business development officer, and essentially having it be something where the CEO could collaborate on things that were, specking what's going to come down the road. And then also there are just certain things that perhaps CE knew better from experience, learned from him, so then you can take that knowledge and improve the co-op. So we proposed that to the CEO at the time. They said, absolutely, this sounds great. I'll think it over. And I think in 24 to 48 hours, they resigned. So, it is what it is. I felt like if it was my job, that was a great idea because you're going to help me out and I get to keep my job and we can figure this out. Because it essentially wasn't the question of like letting that CEO go, but it was a situation of the store is just not going to exist much longer. So this is a great lifeline. And then thankfully, our CFO decided to step up as an interim CEO, which they are currently now a CEO by contract, as we figure out move forward. So Rennie had a great disposition, the right attitude, was like enthusiastic about this plan. He worked very closely with CE. And one of the things that CE was looking at is essentially going back to basics. So I know my personal concern as a co-op shopper was we had lemons where one lemon cost $4.99, $4.99. And I said, I cannot imagine there's a single person in here, Brooklyn or Geneva, Switzerland, who will pay $5 for a lemon. So I would imagine that is some form of shrink. Like nobody's buying these lemons, so why do we even offer them? And from there, we had that conversation. CE did a pretty much like an inventory of the store. And like we had like certain breads that weren't selling, but like, part of the reasons why they weren't selling is they were $12 to $13 a loaf. And he developed a plan to where I think 10 to 20 items, your basic necessities, they were, and I think I have it here, I have notes of that, to where they're going to be the most competitively priced things in the store and references to the stores around town. Your basics like, bread, eggs, water, things of that nature. And we have this cold campaign called Drop It Low, where we have roughly 200 items in the store that are just very competitively priced because we're trying to bridge the gap between, we have several, like the communities that we're in, then we have subsidized and lower income housing that's brand new right behind the co-op. Like if somebody needs to do a weekly shop, they should be able to do that at the co-op, especially since a lot of these people don't have cars. They should be able to walk across the street, get their essentials, and it would not cost them anything more than they would get anywhere else. We already have programs such as Fresh Bucks, and we provide extra discounts to people who are on food assistance programs such as WIC, SNAP, things of those natures. So just keeping in that same vibe of let's make it possible to where the many people in this shopping center, because there's quite a few stores in that area, they can feel confident to pop into Co-op and get, the extremely popular raw milk or, especially churned butter, but they can also come in here and get most of their essentials and be able to not break the bank. So I hope that answers that question for you. I think you're on mute.
Just fighting with technology here. That's great. Thank you, Edea. That's really helpful. And you and Anthony and Roderick also talked about this, how really the co-op can support low income, low access, or LILA communities. And I think I wonder if you could talk more about how now your co-op is kind of reinforcing that commitment to sustainability, but also to food security, really, and food. And what's your approach now then, in order to address those issues you've raised?
So essentially, it's kind of like a dual-sided life raft. You help save the community, you help save yourself, because essentially we needed a stream of income that was consistent. So providing a lot of these foods at an affordable cost. And one of the things that I also enjoyed when I was single living in Tallahassee is that I was able to get decent cuts of beef that were just one-offs. That was easy for me to do. But in a further spec is besides providing those food programs, we also give back to the community and put our names out there in that sense. So we have a program called Worker Bees, where if we have a list of our local nonprofits who we work with, where our co-op members volunteer with them so many times, that will translate into a discount at the co-op. And quite a few of those options are places like Second Harvest and those food banks, where we also donate to those food banks as well, to where we also work with local farms, like urban farms. I'm trying to think of the one. We have an area called Frenchtown, which is a historically Black area where we have people who are doing urban farming, where we sell their products, we sell their wares. So we try to keep it cyclical in the sense of like giving back to the community, keeping the spirit of giving back to the community with even the people who shop with us, as well as working with local farmers in the area. And we also have something called the Red Hills the Red Hills Online Farmers Market, which is all throughout South Georgia and North Florida. We are integral in people being able to get their whatever they purchase off of that market from local farmers. We are a pickup and a drop-off spot for that online farmers market. So that helps people come into the store, but as well as a lot of those farmers who work within that area, they also sell their wares in the store. We have expositions where they come in. They have tasters, they answer questions and things of that nature. So also being mindful of just agriculturally when it comes to that aspect of like food insecurity of, I don't want to get into like all my thesis terms, but like the agricultural, industrial complex of how things are farmed and how that is harmful for the environment, and that contributes to food insecurity, and that has a disproportionate effect on the communities who need these things. We are also working with local farmers who use sustainable practices, make sure that we support them. Quite a few despite us being able to focus on having a more cost-effective approach to the items that we have in the store, we have not, in that process, that did not mean we turned our backs on our local producers, a lot of which are based, within 25 to 30-mile radius of the store, providing and uplifting their farms, their businesses, and being able to keep that sustainability within Tallahassee right there. We still have like locally grown foods in store.
I love the way you all are pulling all of those pieces together. That's great. Really appreciate you sharing that. We can take just a couple of questions from the group. Also, a reminder to everyone that following the forum, or as part, we will be moving into 3 breakout groups. And one of those groups will stay in this room and have a chance to talk more with the presenters, so go deeper. But we'll take a couple of questions before we do that. The other, just quickly, a quick preview that the other 2 groups will be a financial deep dive and and also a chance to meet board and staff and have some informal conversations with them. So you can start to think about where you're going. But in the meantime, maybe we have a couple of questions in the group. And I also want to invite Anthony and Roderick to add any comments into in at this point. And Adam, do we have any questions yet? Or I'll give you a minute to process that. Anthony or Roderick, do you want to add anything while those questions get pulled together?
We do have a question. I can jump in if that's all right,
Okay.
Christina.
Sure, absolutely. Go ahead.
And thanks to Rain. Good to see you. Okay, grocery co-ops that they've shopped at offer a lot of higher price specialty items, presumably because they generate necessary sales. Are there other kinds of basic needs outlets that are suited for co-op businesses enterprise and expand economic and racial equity? And is there some kind of franchise, other stock models that run into that? Heard about Costco and doing something.
Yeah, Anthony, is that, or Roderick, or either of you want to take a stab at that question? That's a great question.
Yeah, I'll try. I'm not sure if it'll get to it or not, but I think part of our strategy was, you're right, traditionally when people think of food co-ops, they think of the natural, organic, higher priced co-ops. And what we're seeing in the last 10 years is really co-ops in low income, low access communities leveraging the cooperative model to address their food access needs, kind of recognizing that the big box stores, have no interest in doing business in those communities. And so part of this, the innovation or kind of R&D is, can we develop food co-ops that can serve more a hybrid product mix? So either primarily conventional, kind of the national everyday kind of brands that you see, or a mix of natural, organic, and conventional. And so that's been a big shift at CCM, is bringing in, as I mentioned, they were a 50-year-old kind of legacy natural food store that had really high product standards of stuff they wouldn't carry, and everything was organic. And over the last few years, we've introduced more conventional produce, conventional meat. The hot bar, they used to employ a chef, and they had a really great hot bar, and we scaled that back and said, okay, maybe you won't have honey garlic salmon and crab legs, but you can get a pretty mean meatloaf and some mashed potatoes. And we've tried to convert the image from a natural food store to just a neighborhood food store. And that's what we intend to replicate as we expand CCM. But that's also what we're seeing within the startup community. Detroit Peoples, Gem City, North Flint Market, is how do we leverage the cooperative model and the community ownership, but make sure that it's affordable and can meet the needs of the community. And so as we get more and more stores that are buying conventional, and increasing that volume, we'll be able to offer it at the same scale that we do on the natural organic side, so that it's really affordable. And so that's the goal. I don't know if I answered your question or not, but that co-ops can serve that need. And we don't have to look for other nonprofits or some of the other innovative models that have kind of stepped in. We're trying to develop a way that co-ops can serve that need.
Great, thanks, Anthony. It looks like Edea and then Roderick have a couple of comments to add.
And I wanted to add to that because essentially he's absolutely right. And one of the things that I was really proud of with our approach was, especially for me as a patron member, was I did not want for us to lose the essence of the store while we tried to save it. Because what's the point of keeping co-op if it transforms into something that, for those of us who, for me, I would often be in there every day because of the hot bar that I fought tooth and nail for, because it was fantastic. And to CE's point and to Anthony Goodwin's point, it wasn't about, we don't have to have the most incredible cuisine, because one thing I loved about our hot bar is that whatever we either had the vegan version of it or something very close. We wanted to sustain that because people came into the co-op every single day or several times a week and brought friends and family in there to eat with them. And that often transitioned into some form of sales. And also our wellness department is solid. So despite the fact that maybe our food prices weren't always our basket shops and the amount of things people were purchasing were like on par. Our wellness was through the roof. So there was a need to like remove that aspect that was pricey, that is very niche, that is very think people are driving across town just to get these things. So we weren't like, well, that's expensive, let's just get rid of it. We truly evaluated our store, what was working, what was not, what made sense, what did not. And for whatever reason, our wellness is great. So we continue to have super expensive CMOS for no reason. Myself, I would purchase the $50 protein because I to this day, because it's the one that doesn't irritate my stomach or has any allergens for me. That did not need to be touched. We got rid of those damn $5 lemons. I know that's for sure. We were able to, integrate things into the store that increased basket, the basket. I think it's a basket shops or however it is that when people come to the shop, the average costs were up. So one of the things that I can say to adopt this model looking forward is don't wipe the slate clean. Truly evaluate the store and see what works and try to keep elements of that as you transition to a more affordable model.
Terrific. We can take, well, thank you, Edea. That's great. And Roderick, take a comment from you, and then we'll move into breakouts in a moment.
Yeah, thanks. I think the only thing I was going to add is that co-ops are challenged in that they want to provide great workplaces. So they want to pay their staff well. They want to pay producers well. They want to do all of these things that are not cheap. They're not cutting labor like you'll find at your Aldi's, and they're not of the scale like a Costco. And so while this is a little bit, some people are have a hard time hearing this. I don't think the food co-op sector should be so trepidatious towards scaling up. And that's what I think is really exciting about CCM, is that you could take this model and you can open other community co-op markets in different communities around the country and save a ton on the cost because so much of that overhead can be spread out. And so I think food co-ops really have to think about scaling up and becoming either regional food co-ops or thinking about a national or statewide model. I had the privilege of going to visit Italy, and at the time, a third of their GDP was co-op, and they've got national chain grocery stores that are cooperatively run. I think there's somewhere between our little independent one-off stores and that are really going to help us achieve all the goals of creating affordability as well as providing these great jobs that we want staff who work at co-ops to have. Thank you.
Great, thanks. Really want to give our appreciation to Edea Bailey, to Anthony Goodwin, and to Roderick McCulloch for their comments and sharing. This is great, and we can continue that conversation in the breakouts. We'll have about 10 minutes for folks to engage in the breakouts, and so we'll have folks move into it. Adam, do you want to handle some housekeeping on that?
Yes, would love to. Going through a little bit of a challenge here as I went to open the discussion rooms and they're closed and not being able to. So if you could just give me a moment, I'll
sure.
Let
me provide. So Adam, in a moment, will give us instructions, and then three breakouts that if they open, if technology works for us, you will get to stay put here to talk a little bit more about the Cooperative Forum, and then you can also, if you'd like to get some financial questions answered on the audit or other financial questions, you can go to the financial deep dive, or you can go to the board and staff meet up. And we will be wrapping up promptly. Our board is going into a board meeting then immediately following the breakout. So folks will have to exit. Reminder to board members that if you would exit and be in the other link by 1:30 so that we can start the board meeting.
Thanks, Christina, for that extra minute. So you should be able to navigate to the top of the window. Sometimes you have to press on the ellipses, the ... more. You can go right to a breakout room. You should be able to join that. And for Financial Deep Dive, we're excited to have Andy Shively and Mark Downey, a really fantastic team. They can get more into the financials if you have more questions about that. We're going to have a meet board and staff, a very informal room just for staff and board to go and talk. And then if you want to stay here, you can just be part of the continued dialogue with Edea and Anthony and Roderick.
So if you haven't found it yet, find the icon for rooms at the top, just repeating what Adam shared. And when you click on it, it took mine a couple of times to respond, but then it finally did. And then I can, again, either stay put or choose one of those other rooms and join that. And people will exit directly from the breakouts, so you don't need to come back to this room.
Thanks,
so
Christina.
As we could go ahead and get started on the with the co-op forum follow-up as folks are moving. So yeah, I wanted to maybe just pull you back in, Anthony, to see if you had any additional comments you wanted to make. Edea and Roderick added some really great content at the end that I wanted to make sure if you wanted to comment on, or if you want to set any framing for this breakout.
Yeah, I think Roderick brought up a good point. As we think about expansion of CCM, there's kind of this tension or debate, I guess you could say, within the startup community around the viability of the single store startup. And I think as we develop CCM and it eventually grows and is developed and has multiple stores, that I could envision a scenario where a community is interested in a co-op and they're calling CCM to see if CCM is interested in opening in that community. Of course, there will always still be, the one-off needs and kind of the community that has the market opportunity and the community engagement to do it themselves. But, we continue to kind of see how challenging it is to operate a single store, both from the volume perspective, but then also, as Roderick said, kind of the operating and administrative overhead that it takes. And as you spread out, you can have one HR person that's serving multiple stores, one finance person. And so, yeah, that is the goal. And I think there will be some consolidation as we build out that model where we're able to see regional or national co-ops, and hopefully that contribute to long-term viability.
Thanks. And we could just, I think it's small enough group that folks can just raise their hands. And then I think that, and Adam, you'll be able to make sure folks can get off of mute. I'm going to hop over to the other room and make sure things are going over there.
Yeah, thanks, Christina. Just because we're staying in this main room, just tell me in the chat if you want to be able to speak, and we can open that up for you. Terrence, I think you had a question. Please feel free.
Yeah. Well, first I want to kind of give many thanks to Anthony and to Edea for sharing about community co-op market. I'm very curious about it. I've actually, observed different examples of co-op markets. Here in Atlanta, we have a damn near 60-year-old market called Seven Nanda. And it's in that tradition that you talked about, organic, natural whole foods. But I'm also aware of another example out of, I think it was North Carolina, the Renaissance grocery store. And, it didn't stay around that long. And for many of the reasons that you described, where, it situated itself across the street from a public housing community to be sort of a way to alleviate food insecurity in the midst of a low-income neighborhood. But the food that they were offering was in that traditional sense, whole foods, organic, very high price, what some of us call she stuff. And so what they found was people would bypass that grocery store, take taxis, the bus, Uber, and go to a Walmart to get their food and groceries. So it eventually failed. So I'm sort of glad to hear that, you are aware of this and you're taking a different approach. I'd love to hear more about that and how you're orienting yourselves to people who are in the most need of food. But I'm also curious about your hybrid model. You talked about 2/3 of the members being consumer, and I think you said 1/3 being investor. So maybe we start with the hybrid, because you talked about the other stuff. So how did you come up with that ratio, that formula, and what was the reason for it. Having so-called investors as members is uncommon, at least in my experience.
Yeah, so it's a little bit before my time, but I'll share what I know. And I think the ratio, that could be part of kind of statute of what's allowed. I'm not sure. I think the vision, why they did it, was the vision of wanting to develop multi-state, multi-store cooperatives. They didn't want to have one completely consumer board that would just be tied to Tallahassee. They wanted to have the investor class, I think, both to kind of lead this was a conversion, this was a struggling co-op. And so I think to have some input and influence over the operations of CCM to get it to turn around, but also on the longer term strategy. And the vision is, as we would add additional stores, there could be a store in Austin, Texas, and so consumer members that are part of that store, could run and serve on the board. And so at some point we'll have, it's oftentimes we kind of refer to it as think of REI, millions of members from all over kind of serving on one cooperative entity. And so I can find out, Terrence, for you how they landed on the 2/3, 1/3, but I think the intent was to make sure that the investor kind of had some, although it be the minority stake, had some influence over the decisions that the entity would make, being combined with the consumers.
Hey, thanks, Anthony. We've got one question. We are going to try to close in 2 minutes. But Nicole, I hope you should be able to unmute yourself and ask a question. You can also just type it in. Can't unmute. Okay, tried. Okay, I can unmute you more, but anyway, does Roderick know anything about the closed Lunds in St. Paul? Yeah, but also Nicole can follow up with you.
Yeah, I know a bit. I know that they were struggling, and I know that I guess I don't know much. I mean, I know that they were struggling. I think a grocery store would have a hard time moving into that area. As you might imagine, a lot of downtowns are trying to figure out ways to reinvigorate. And so I think that's kind of on the city to determine what might be a good fit there. There is some housing development going on downtown that could make it more likely for a grocery store to be more successful in that location. But downtown grocery stores in large cities across the country have definitely been struggling since the pandemic. Thanks for the question.
All right, we're just 1 minute away. I just wanted to see if Edea or Anthony or Rob wanted to give a last thought, and then again, thanks for everyone for coming.
I can expand just a little bit more quickly on the first question of other things that we're doing to be successful in the community. I'm sure other co-ops are doing this, but make sure that you tap into all your state and federal programs. Like, we offer extra discounts on top of people who are already receiving SNAP, WIC, things of that nature. But in the state of Florida, a part of the Feeding Florida network, we are a part of a Fresh Bucks program. So up to $10 per shop, we will match dollar per dollar every time somebody shops with their SNAP benefits. And then they can use those fresh access bucks to purchase fresh fruit and vegetables. So essentially free. It's almost like a 2-for-1. And it's a program that's geared directly at farmers markets, co-ops, small community grocery stores, and things of that nature. So it is an extra incentive, and it's just our job to promote that we have these programs and to take away this facade that the co-ops are only for a certain type of people. So we try to really keep the environment and the marketing very inviting, so everyone can benefit from all these programs that we make sure we provide for our clientele.
Excellent. I'd really like to thank our guest, Edea Bailey. Also, thanks to Anthony and Rod. We really care about the partnership we've got with NCG and NCGDC. NCG is also a sponsor. So we're really trying to work together through these systems that care about our cooperatives. I put my email in the chat. If you have any questions following up, please let us know. Thank you so much for today. Everybody have a great day and stay strong in the co-op movement.